So let's talk about Tesla. If you've been watching the stock market at all, you've probably seen the headlines. They just had record-breaking sales. So why on earth did their stock drop? It's a paradox, and it's got Wall Street completely buzzing. Today, we're going to dive deep into the very mixed signals from Tesla's latest earnings report, and we're going to figure out what is really going on.
I mean, this is the puzzle, right? This is what has everyone so confused. You've got record sales over here and a falling stock price over there. It just doesn't seem to add up. It's a real head-scratcher. So let's peel back the layers and see what's actually driving this pretty strange reaction from the market.
And right here, this is where the whole story gets complicated. On the one hand, Tesla brought in a massive $28.1 billion in revenue. That's a huge beat, way more money coming in the door than anybody expected. But, and this is a big but, they missed on their profits, or what the analysts call earnings per share. This is the fundamental conflict that's creating all the debate and splitting investors into two camps. To really get this, we have to look at the two powerful stories that are fighting for control of Tesla's stock price. So first up, let's check out the bull case. This is the optimistic vision that has investors dreaming big and betting on a revolutionary future.
The bulls, they point directly to this number, a record-breaking quarter for revenue. I mean, this isn't just a little bit of growth. It's proof of the incredible global demand that still surrounds the Tesla brand. It shows they can still pull in huge amounts of cash.
And all that revenue was driven by this. Nearly 500,000 cars delivered in just 3 months. Now, part of that was a rush of people trying to grab an expiring tax credit, but for the bulls, this is hard proof that Tesla can still move a massive amount of product whenever it needs to. But here's where the bull case gets really interesting. It's not just about cars anymore. Look at this, an 80% surge in their energy division. This is such a critical piece of the puzzle because it shows the company's story is changing. The bulls see Tesla evolving into this diversified tech giant, not just a car company. And all that activity created this, a record cash pile of over $41 billion. Now, this is more than just a number on a spreadsheet. It's a war chest. It gives them the freedom to innovate, to fund those moonshot projects, and to build the future without having to rely on anybody else. This quote from an analyst really just sums up the whole bull perspective perfectly. They're basically saying, hey, don't get bogged down in today's profit numbers. The real story is what's coming next with AI. For them, the short-term dip is just a little bit of noise compared to the massive signal of what's on the horizon. And this is that future they're talking about. For the bulls, this roadmap is everything. We're not talking about some far-off sci-fi dream. We're talking robo-taxi services rolling out in major cities by the end of next year, a public demo of the Optimus robot right after that, and then getting ready to mass-produce a dedicated robo-taxi vehicle. The argument is simple. You're not investing in last quarter's profits. You're investing in this. Of course, for every investor who's dreaming about that future, there's another one who is slamming on the brakes, totally focused on the problems of today. So let's flip the coin and dig into the bear case. And this is the question the bears are asking. You know, if the future is so bright, why did the stock drop? Why are so many people worried? The answer, they say, is in the core business, the part about actually selling cars for a profit. This chart right here, this shows the single biggest fear for the market. It's the automotive gross margin, which is just a fancy way of saying how much profit Tesla makes on each car it sells. And it has plummeted from a high of 27% all the way down to 18%. And why? Well, it's because they've been cutting prices to keep those sales numbers up. So yeah, more cars are being sold, but for a lot less profit per car. And remember those record sales we talked about? Well, the bears have a very different take on that. They call it pull-forward demand. The idea is that the expiring tax credit didn't really create new buyers. It just convinced people who were already planning to buy a Tesla in the near future to do it right now. And the big fear? A potential sales cliff is coming. So the bear case really boils down to this. Profitability is shrinking. Competition from rivals like BYD is getting really intense. The sales boost from those tax credits is over. And frankly, the stock's high price looks pretty tough to justify based on the profits they're making right now. You put all that together, and it's kind of a perfect storm of concerns that is making investors really nervous. And this isn't just some fringe opinion. A lot of the big Wall Street analysts are advising caution with a pretty lukewarm hold rating. Some are even more pessimistic, warning about that potential sales cliff. This just goes to show how seriously these short-term problems are being taken. Okay, so we're left with two completely opposite stories. The bulls are looking 10 years down the road. The bears are focused on the next 10 months. The key to making any sense of this is to realize that you're basically looking at two different companies hidden inside of one stock. Let's just lay it out side by side. The bull case sees an AI and robotics company where the future vision is all that really matters. The bear case sees a car company where the present reality of falling profits is a huge problem. Both sides are looking at the exact same data, but they're coming to completely different conclusions based on what they choose to focus on.
Now, this is not financial advice, but here's a framework to help you think through your own position on this. First, you have to define your time horizon. Are you in this for 1 year or for 10 years? Second, define what you believe. Do you have faith in that AI and robotics vision, or are you focused on today's car profits? And third, define your risk tolerance. The bull case requires a ton of patience through some wild swings for that potential long-term reward.
Ultimately, it all boils down to this one simple question. What company do you believe you are actually investing in? Is it a car company that's struggling with profitability today? Or is it a robotics and AI company that's on the verge of changing the world tomorrow? Your answer to that question will probably determine whether you think Tesla's stock is headed for new heights or if it's facing a very difficult road ahead.